Hey everybody, it's Brian Shannon from Alphatrends.net. I hope you didn't get hurt too badly in this market this week because we had a tough one. We're looking at the S&P 500 on a weekly time frame, and we're still clearly in an uptrend. I mean, higher highs and higher lows. The 20, 30, and 40-week moving average are all rising. That's not my time frame, so I'm aware of it. But the daily time frame, what we saw here was a failed breakout, and from that failed breakout came a fast move lower. We came down to the volume weighted average price from this prior peak as well as this gap lower, and that kind of saved us a little bit here on Friday at that 450 level. But when we look at the shorter term time frame and I look at the here the 15-minute, what we see is we're stuck below a declining 5-day moving average. And if you've been following me for any period of time, you know that that's my number one indicator of trend over the intermediate term time frame. It's something I've been talking about in every single one of these videos for over a decade. Go back and look if you don't think so. But when we're below a declining 5-day moving average, it makes no sense to buy the dip. That's just a silly phrase that people say. But the fact is, when we have lower highs and lower lows, there's no reason to look to get involved. What we want to do is we want to see the market flatten out. And this is kind of what I draw in almost every week as well, saying that if we want to get involved, we want to see something like this happen, that it gets back above a flat to rising 5-day moving average, breaks some resistance, and then if we have a place close by to set our stop, then and only then does it make sense to make a new purchase. So let's take a look at the numbers first before we continue, because again, it was a pretty bloody week. With the S&P lost 1.2%, and the market's down month to date. We're only a couple days into it, of course, but the Russell 2000 continues to be the worst. People who've been trying to buy the dip in there have been just destroyed, as they have been in a lot of individual names. Let's take a look at the Russell 2000. If you've been listening to me over the last few weeks, we talked about this breakout, and I was warning that not all these breakouts have in the Russell 2000 after a period of consolidation have led to continued strength. It's what happens after the breakout that's most important. And where we take our cues on that breakout is, of course, from the daily time frame. We spoke about how this prior band of resistance had the potential to become support, that we don't want to be a buyer at a rising 20-day moving average or a prior level of resistance unless we had a flat to rising 5-day moving average. Here's the 5-day moving average. You can see we've been trapped underneath that. There's been zero reason to buy the Russell 2000 on the dip, and not doing so has saved you a tremendous amount of money and heartache. And there's a lot of people, I'm sure, that I'm talking to right now who are trapped in this, who believe that it was a good idea to buy at the rising 20-day moving average or prior resistance. Prior resistance tends to act as support. The 20-day moving average often acts as a place where buyers show up. But if it's not showing up, we don't have the evidence on the shorter term time frame, we wait until the evidence is actually there. So what could that mean for the Russell 2000, let's say this week? Let's say we ran all the way up to here. I wouldn't want to be a buyer if it got above that. I want to see a flat 5-day moving average, and I also want to make sure it's not extended. So if it did something like that, I'd like to see it pull back down, kind of tighten up a little bit, and then if it were to go something like this, I would consider it as a counter trend rally, because of course the daily time frame is broken. We're in a downtrend there, but I would consider it as a counter trend rally that perhaps we could get a little bit of a bounce, but only if I had the ability to put my stop underneath one of these higher lows. Let's take a look at the longer term picture of the Russell 2000. We'll do that on this monthly time frame. What I did was I anchored a volume weighted average price off the 2020 low, and once it hit that volume weighted average price, we do the anchored volume weighted average price handoff. That became a new point of control. And then as it pulled back and tested that volume weighted average price and rallied from there, that's the new point of control where we measure the psychology of the market with the anchored volume weighted average price. Well, you can see where we are right now. We're coming right into that level. So what does that tell me? Does it mean it's a buy? No, because we have a declining 5-day moving average. It tells me it's a level of interest where something like this might occur, and perhaps it will lead to a buy that would give us a bounce. And even if it does bounce, I would certainly be aware of the declining 20-day moving average, declining 50-day moving average, declining volume weighted average price off the peak. So if we were to rally up into this area where those three are coming together, then I would be looking to really tighten my stop in that area. I'm not calling for a bounce. I'm laying out the potential scenario because here we are in this level where it makes sense it might occur. The Nasdaq also got hit. Weekly time frame, clearly in an uptrend. Daily time frame is a mess, but where did we come down to? We came down to the volume weighted average price from this low and this peak, and also in there we see that green 50-day moving average. So, very heavy volume. What do we tend to see? Volume accelerates with the trend. So it's doing what it's supposed to do. The volume is picking up on the way down. The biggest volume tends to occur at the turning point. The fact is, we don't know if this is a turning point. Just because it's the biggest volume so far doesn't mean it will still be the biggest volume. That's not a buy signal. It's a reason to say, okay, maybe we're getting a little bit of capitulation in here in this important area where these three levels line up. So let's look to the shorter term time frame and look for possible evidence that the buyers are gaining control. Do we see any of that evidence in here? No, we don't. We saw a little bit of a bounce at the end of the day, which if you're a day trader, sure, that makes sense, nice rally, but we're still below a declining 5-day moving average, and we're well below it, so it's going to need more time to heal in the Nasdaq. Semiconductors are, have been the strongest. They're still holding above this level. If they break down, the first level I would be interested in is the volume weighted average price off of this gap. That would bring it down to about 293. I think, though, that if it were to test that, it's more likely it'll come down to the volume weighted average price from the low right in here, and that would bring it down a little bit further towards this level. So why bother keeping a volume weighted average price on that gap? Because we simply don't know. It's where there was a significant turning point in the psychology of the market, so we anchor that. There was a big there was a big surge in bullishness, and it never looked back from there. Now that will become our first level of interest, but I wouldn't, certainly wouldn't be buying the dip. As you know, I don't believe in buying the dip. It's something I've been consistent about. You buy strength after the dip when you can protect yourself. And a lot of times, people have said, well, Brian, that doesn't make sense. I buy the dip and I make money. And now they're singing a different song. Anyways, the biotechs are a mess. They're coming down to the volume weighted average price from the COVID low. You can see that we anchor, we do that handoff right here, and that volume weighted average price was broken this week. This is the likely level where it will start to, try to stabilize. A lot of times what we see when it comes down to an important level of support is it'll undercut these lows slightly and then do a sharp reversal, similar to a failed breakout on the upside that, it'll break out and then fail quickly. Well, it traps the buyers up there and short sellers, who covered up there. In terms of the biotechs, if they're to come down through these prior lows right here, it'll set off stops, it'll bring in uneducated short sellers, and then what it basically does is rids the market of supply. The shorts who have been involved will look at that and say, hey, it's time to start to cover. Once they start to cover, it brings in other sideline money that says, hey, looks like maybe the biotechs are bottoming out, let's trade them for a bounce. And there's a lack of supply, so you can often get, again, that's where the phrase from failed moves come fast moves comes from, because it's a clearing of the psychology. The market becomes too one-sided on the way down or on the way up in the S&P 500, and then it puts it in a condition where it's able to reverse strong. So, biotechs are coming into that area. If you're an aggressive trader and understand how to do that, then great. This is something I talk about every single day for subscribers to alphatrends.net. I don't talk about that subscription a lot, but if it's for you, then take a look. If not, no problem. The financials had a big surge right here, a big shift in psychology with that gap in the fourth quarter of last year. Then we anchor another one. This became a point of control, and you can see it was tested. We should actually put one right here and see how we're doing from there. Well, now we're closing below that volume weighted average price for the first time. It tells me we're likely to come down towards this level, 36.5-ish. Clearly, the intermediate term trend is lower. We have a declining 5-day moving average with lower highs and lower lows. Don't look to buy the dip in the financials. What else is down near that 36.5 level? Well, just below that, we have the year-to-date volume-weighted average price at 36. So that tells me the new level of interest on the downside in financials is 36 to 36.5. That's where I would start to look for evidence on a shorter-term time frame that the buyers might be gaining control. And if I see that set up in a low-risk way, then perhaps it's a buy. But buying blindly into these dips is just foolish and asking for your money to be taken from you. The energy names also broke below this prior band of resistance, which had been support. Let's see if they stay below this volume-weighted average price from the peak, or if they're going to be able to recover and get back above there. Right now, the jury's out. There's no reason to be involved. If you're not sure what to do, then cash is a position. I'm not going to go through the individual stocks. I mean, there was a lot of devastation in the individual names. Again, I pointed this one out on Friday on Twitter. Do you want to buy the dip to the volume-weighted average price from the IPO? It had been resistance and then support. Will it become support again, is what I said. And I said, well, basically, I'm not going to buy it, not with a declining 5-day moving average. This is where it was testing that year-to-date VWAP. Well, look what happened to it on Friday. Obliterated. There's no reason to buy the dip. Robinhood, terrible stock, terrible stock. Every single person who bought this stock is losing money. It closed on the lows on Friday. No one's a winner except for Sergey and his partner who sold it short to the market, basically. Facebook has a declining 50-day moving average. Don't trust rallies with a declining 50-day moving average. On and on and on and on. Tesla is right back down to this volume-weighted average price we had previously spoken about. If that breaks, you know, Elon's still selling. I don't know who's buying it from him, but you know, there's a lot of problems in this market. I spoke about Carvana, how I'd shorted this one on Wednesday. I'd mentioned it right in here before it really began its decline. I've got 1/3 of that one still open on the short side. I'd lowered, half of my stop to this point over here, or 249 on Friday, and got stopped out of 1/3. And now I've got the stop on my balance right up here. Anyways, again, have a good weekend, and thanks for tuning in.